everybody, to another episode of Stock Market Investing Secrets, the way to wisdom and wealth, Warren Buffett style, with your host Imhotep Ramses II, also known as Omar Lyons. Please feel free to visit our Facebook page at Omar Imhotep Ramses Lyons, or our business page at facebook.com/omarlyons.org. Today we're going to talk about treating it as a business, treating your stock market investment as a business. So if you initially make an investment into a business, let's say a retail store, you open up a restaurant, you're going to need capital, you're going to need time. For a restaurant, you're probably going to need, maybe $50,000 or $100,000 to start, open it up. You need a space, maybe to rent if you don't own it. You're probably going to need a crew of employees, and you're going to need a whole lot of time, equipment, and supplies, and so on. Good news is, for the stock market, you don't need a crew of employees, you don't need to advertise, you don't need marketing, you don't need $100,000, at least not initially. And so it's very easy to get started in the stock market, and to treat it as a business is a philosophy, and that's actually one of the ways that Warren Buffett views his whole stock market experience. He looks at it as a business. So here's an example of how, for example, you'll get your costs back. Today we're not going to be talking about getting your capital back. We can leave that for another session, but we want to talk about getting your costs back. Now, remember, each time you buy and each time you sell, your broker is going to charge you a commission. Now, this can range anywhere from about maybe $4 to about $7. But for today's example, let's just say that your cost was $20, your cost, right? Now, let's say you initially spent $5,020, right, on an investment, because $20 for the commission, even though that's kind of high, but we're doing that for exaggerated effect today. Okay, and let's say you bought 50 shares, or let's say a stock for $50, and you bought 100 shares. Okay, so it came up to $5,000, and then plus your $20 commission, $5,020. Now, when would you recoup that $20 cost? Now, let's say, for example, you bought a stock and it pays you, some stocks pay 3, 4, 5, 6, even 7% or higher. Let's just say a stock that pays you 5% per year, per annum, yeah? So you're looking at about 1.25% per quarter. Okay, quarter meaning every 3 months. So initially, right, it's going to cost you that $20 in commission to your broker, right? But you're going to start getting, let's say, 1.25% per quarter. Let's say 1% of $5,000 would be $50. Quarter of that would be about $12.50. So you're looking at about $62.50 coming in every 3 months, every quarter, yeah? So with your initial $62.50, right, you're going to minus that $20 commission that you would have paid, okay? So that means initially, now you're going to have $42.50, right? Let's say that first quarter. So you're already going to get your $20 back that you spent on the cost, okay? Let's see, second quarter, you get another $62.50. Third quarter, another $62.50. Fourth quarter, another $62.50, and on and on. So at the end of 12 months or a year, you should have about, let's see, 0, 5, 10, 15, 20, 0, carry 2, 2, 4, 6, 8, 10, 0 again, carry 1, 5, so 18 and 5, 19, 20, 21, 22, 23, so $230, right? Net, because this is after you've recouped the $20. Now, bear in mind, this is just a $5,000 initial investment, right? And this is already your return that you're getting back every 3 months if the company pays about 5% in dividends. Now, this is not static. This is not going to stay the same, or we hope not. If you do your research and you invest in the right companies that increase their dividend payout, then this is going to move from here yearly, or maybe even before the year is out, the company may even raise their dividend payout. So you might even be getting more money. And again, this is just an initial $5,000, and you can always keep adding money to it periodically, every day, every week, every month, every quarter, whenever you have extra money or whatever you set yourself on a schedule to contribute a certain amount, if it's every month or whatever the case may be. But this is just a small example, just to give you an idea of how it works. And so this asset that you put in place here, this initial $5,000, will start bringing you money and keep bringing you in money as long as that company is paying dividends. And this is not to mention other things that you can do, like selling covered calls, or if the company, again, raises its payout, or there's some other things that you can do. But we're not even looking at the price of the stock, right? If the price of the stock goes up or down and so on and so forth, okay? But this is just talking about how soon you get your commission back if the company pays dividends. And this is how it looks, all right? And remember that you can always reinvest, right? And this is how compound interest comes in again, and Warren Buffett, the genius of investing, right? Compound interest. Brokerages, a lot of them, most of them probably will have you get the opportunity to reinvest your dividends without cost. That means you don't have to pay another commission, another $20 again, or whatever they charge to buy more stock, right? You can automatically reinvest your dividends without cost, okay? So you can take this and you can buy more stock. This will probably buy you another, 4 or 5 shares, and those will pay more, and so on and so forth. So when you look at principles like compound interest, you look at people like Warren Buffett, you look at The Richest Man in Babylon by George Clason, you talk about compound interest and money working for you. This is how you do it, and this is how you start. At least this is one way. And this is how you start, and it keeps going and going and growing and growing as you keep putting more and more and more, and then you invest more, and it grows more and builds more, and before you know it, it grows into, from a tiny seed, because that's how they say wealth starts, from a tiny seed, it grows into a big, huge tree, and it's just a phenomenon, okay? But this is just a start, and it's a small start, but guess what? You must start somewhere, otherwise you won't get there, okay? So again, this is a short example just showing how you would get your initial cost back, not capital, we'll save that for some other episodes, but your cost, okay? And remember, you don't need a lot of overheads. You don't need $100,000 to start. You don't need a crew of employees. You don't need space. You don't need marketing. You don't need sales. You don't need any of that. This is something you can start basically by yourself anytime. And you don't even really need to start with $5,000. You can start with less, but we're just using that as an example. All right, so I hope this was helpful for everybody. Again, please feel free to visit our Facebook page at Omar Imhotep Ramses Lyons, or our business page, facebook.com/OmarLyons.org, and feel free to reach out to us, connect with us, follow us, like us, comment, subscribe, share, check us out, and I hope you have a good week. Thank you for joining us, and this is Imhotep saying peace.